That's moving on. We got earnings this week, Brian. We're talking about Nike earnings. Tiger Woods may or may not be back in the fold for Nike. For me, maybe that's a sign of strength for Nike. They don't necessarily need them, but I think Nike looks a little bit like the regional banking index, a lot like a lot of the small cap stocks out there. And it's really a company that didn't really have the best year this year, a decent enough year, but didn't break out like some of the big mega cap tech names. But I think it's a company that could benefit as long as the economy stays strong, the consumer stays healthy, and these interest rates falling. It's going to be a double winner for them because they have their prices coming in aren't increasing as much, but they're still able to charge high prices. So looking at their charts, it's another cup and handle type formation. This one hasn't broken out like the regional banks have. So I just be looking out there, and I'm actually going to do an earnings calendar where I'm kind of bullish for the long term. I'm kind of going to look to sell the earnings volatility, and I'm going to sell the Jan 125 call, buy the March 125 call. I'm expecting a nice year out of Nike. By doing this calendar, I'm only going to pay $1.92. That March 125 call is about $5. So I got a lot cheaper way to get into that 125 call. And I'm just expecting a moderate move after earnings and then a nice run through March. Brian, what do you think of my Nike earnings play?
Well, I mean, we've made a lot of nice calls so far on earnings plays. We haven't really done a trade that's what's a call calendar time spread. So this is sort of a new trade for folks to sort of listen in and take in. If I'm looking at this, basically what needs to happen is I want to see the stock stay below that 125 level through January, because then that call bakes off and goes out worthless. Now I've lowered the outlay cost of buying the March 125 call. So now I still then have the upside over there. So when you make this kind of play, especially heading into earnings, you got to be a little careful because it's a catalyst event. Could it blow through that 125 level? Maybe. But you look at the charts, I think there's a little bit of drag going on with Nike in terms of it's got a bit of a China play to it. And we've seen how much that economy has struggled lately. So it may struggle to get through that 125. I think, Joe, that's why you're probably selling that near dated call to lower the cost of playing March further on into the end of the first quarter into next year and see how that goes. So I do like that play and sort of lowering your costs. That's how a time spread works, is basically you want things to sort of settle in after the earnings event to happen, not blow through those strikes. So you got to pick a strike that you don't think the stock is going through.
That's exactly right. I'm just seeing this resistance here. I think that'll be tough for it to jump through on earnings. Now, if it does, it won't be a total catastrophe because I'm of course covered. I have the March call here, but I do think volatility is a little bit higher into this event. If we get a small run up, a small move higher, it's going to be a nice winner. I'm going to look to take off that Jan call after earnings and then let the stock appreciate higher is kind of my goal here. It's another way to just get into that March call a little bit cheaper instead of selling an upside call. I want to sell the calendar shorter duration so I can take that off after earnings, let the volatility come in, and then being at the 125 strike just a little bit cheaper.